Hello, my name is Todd Seabaugh. I'm a Vice President and Business Initiatives Lead for RGAX in the Americas. Today I'm going to be speaking to you on the topic of embedded life insurance. Embedded life insurance is a growing component of the life insurance sales. It's been estimated by Simon Torrance and Aperture recently in a report that they provided that $5 trillion of total insurance out of the $80 trillion to be sold in the next 10 years will be by non-insurance brands. Trusted brands are lending their credibility to the sale of many insurance products, but there'll be a big advantage for life insurers in the coming years. Also, the micro-insurance nature of most coverage placed through embedding keeps the financial friction low for the individual and makes it a much easier sell for these brands to get people started with life insurance coverage. So in other types of insurance, partnering with trusted brands has proven to lend a lot of credibility to the insurance partners who are offering protection through the purchases. In many cases, the insurance brand is not forward at all, and the trusted brand is the only brand that the consumer is familiar with. Sample products include warranty extensions and replacement plans, as well as more recently, embedded car insurance. It's a much simpler sell because the purchase is at one point in time. And by much simpler, I mean it would be simpler than the life insurance, where typically the premiums go on. And in these cases, you can buy the entire coverage at the same point in time you're buying the primary product. So for life insurance, we're really at the beginning of the journey for embedding. There are a few offerings out there today, and small but meaningful proof of concepts are going on. And I'll talk through a couple of those in a few moments. Introducing life insurance to underinsured and uninsured populations is really the key. We're not going to place traditional larger policies that give full coverage to an individual. These are just microinsurance policies that get a person started with their first life insurance experience, and hopefully, as their needs grow in the future, they're compelled to buy additional coverage. So some of the big challenges with getting life insurance as an embedded product is one, that the policy size is too small for the life insurer. Administrative costs would be a very large part of the overall cost associated with the product, and so getting to a very small friction sale is really important. Second, the technology needs to catch up. Many life insurers are still on mainframe computers, and so they have a lot of legacy debt from an IT perspective that needs to be overcome if they're going to integrate cleanly with InsurTechs. And finally, the number of players involved can be really daunting, and we'll talk about that on the next slide. So a bit more on that number of players. Certainly there is the primary brand, and that brand has the consumer's interests and their behaviors at mind. They understand the consumer, and they also have the confidence of the consumer. Second, there are the insurers, and certainly insurers are experts in risk management, in underwriting, and policy administration. Then on the InsurTech, I'll break this out into three groups. There is the new InsurTech startup that's certainly going to be involved. They'll do a lot of the IT work to do integration. But there's also potential InsurTechs that are at the same time TPAs or BGAs that can do full policy administration on behalf of the insurer and create a much tighter and larger component of the ecosystem within their realm. And then finally, there are governments and regulators. And these folks define environments and guardrails for customer innovation in insurance. Their role varies greatly depending on geography around the world. So there are three primary areas that I see as key focuses for insurance sales through embedded means. One is property and casualty, and certainly this has been around for quite some time, is well beyond experimentation, and they're very active in this space. So places in the US like Best Buy, globally with Apple, and jewelry around the world can be insured at the time it's purchased. Second, there's travel insurance. So we're seeing more and more trip cancellation and inclement weather cancellation, and also healthcare offers that are associated with the purchase of your travel experience. And then finally on the life insurance side, just highlighting one experiment. This is in Africa, primarily South Africa, but a supermarket chain called ShopRite has been giving loyalty life insurance, which is just a very small microinsurance play, but by spending a certain amount of money every month, the grocery store chain itself pays a small premium for life insurance on behalf of the individual as long as they continue to shop. So as I stated at the beginning, embedding of insurance is becoming larger and larger as a component of insurance sales. Tesla, as you may have heard, is beginning to embed auto coverage in the sale of the car itself. So coverage is maintained through Tesla, not through an additional insurer. And auto insurers are starting to bundle accidental death coverage into the auto insurance policy. Mortgage insurance is tied to real underwriting requirements, but still embedded at the time of mortgage application, since most mortgages take a bit of time to process. On the travel side, credit cards are giving automatic coverage for AD&D. Car rentals are providing accident coverage as part of the credit card purchase. And on adventure travel, they are offering accidental death coverage. There's also point-in-time sales, things such as car seats that offer a child policy along with the purchase of the car seat, or even parental policies can be elected as well. So when we think about any type of embedded insurance, but particularly embedded life insurance, we need to look for opportunities where friction will be very low. When we fill out an application for a car loan, for instance, 95% or more of the information provided is already completed the insurance application. There's very little need for additional information. We also find in talking to credit card companies that with each additional question that is asked on a credit card application, the drop-off is dramatically increased. So the trusted brand also wants us to make sure that we're not adding a lot of questions because those questions add friction. Also, from a microinsurance perspective, people think about microinsurance, say, well, I'm not making a major financial decision here. So the friction reduces there as well, but they don't have to contemplate, do I really want to spend this much money on life insurance or some other insurance product? Also, to reduce friction, we want a fully digital experience from customer acquisition to administration of policies and claims. And finally, we want to tie our products to the monthly premiums or payments or installments so that there's no new bill for the individual to deal with. Whatever the primary product, if it's paid for in installments, we want the insurance product to be a part of that installment. So really, embedded insurance is not new. Property and casualty offers have been abundant and they've been around for years. The new horizon is for life and health products. But finding the right products to partner with is really essential. It's not as easy as property and casualty where I sell a product and I put that warranty or extended service contract on with it. With the type of products we'll be able to bundle with, they're probably going to be things more like cell phones or auto loans or mortgages where there's a continuous monthly drip of payments being made. So finally, some key takeaways. I believe that life insurance as an embedded product is going to find its greatest success if it follows the lead of property and casualty. Number one, we need to build on the reputation of brands that individuals trust today. And we need to append our products to that brand so that we play on the confidence they have in that brand. Second, we need to keep the application and underwriting friction very low. We can do this through offering simplified issue products with only third-party evidence, or we can do this through accidental death type products. Third, offer a fully digital experience to the buyers, no paperwork, no phone calls. And finally, let's not create new bills wherever possible. Thank you for your time, and I hope you found this information valuable.